You're welcome to the Business Lens on Rapid TV Abuja. And in the world of business, let's look at the business stories that is making it round, starting from Nigeria's legal tender that closes at 1,436.57 per dollar. That is gaining 17 kobo over the weekend, while parallel markets rates reached 1,455 naira, and external reserves rose to $43.32 billion following the oversubscribed Eurobond issuance. And also, Nigeria seeks a fresh $500 million World Bank loan under the $2.39 billion Finclude project to expand MSME finance with $400 million from IBRD and $100 million from IDA. So away from that, we move to the next story, which is the federal government of Nigeria that says it draws over $5 billion in manufacturing, fintech and energy investments as government reforms boost investor confidence under the renewed hope agenda. Away from that, we go to the next headline that says the UK exports to Nigeria rose by 12.3% to £5.6 billion, while imports from Nigeria increased by 8.2% to £2.3 billion. Combined bilateral trade in goods and services reached around £8 billion, which is around up 11.1%, or you could say £793 million total from the previous day. So we are going to be looking at the stories and as well a look at the market trend today. I am Divine Alex, and joining me is our business analyst Daniel Efa. You're welcome to the show.
Thank you for having me. Good morning.
Okay, so let's start with the Eurobond success, right? This is about the Naira, right? That Eurobonds lifted over the weekend. So as we said, the Naira has wrapped up the 5-day trading week on a steady note that appreciated slightly by 17 kobo to close at 1,436 Naira per dollar on Friday, which has gone up to, I think, 144 Naira after the time. So CBN, according to CBN's official figures, they said across the week, the local currency held firm with a narrow band, signaling renewed investor confidence following Nigeria's oversubscribed Eurobond issuance. So now that brings me to you. What does this renewed investor confidence say about Nigeria's short-term fiscal credibility? Do you think it's genuine, or it is just about the Eurobond-driven optimism?
So I think that we still, I think the word renewed looks like maybe there was a stop before. Really, there has not been a stop since the government took over, because then we're looking at how the CBN has reacted to inflationary pressures simply by increasing interest rates. So the fact that the interest rate is high is enough incentive for investors to invest in the euro bonds. Of course, the euro bonds, not necessarily the word euro, is just a bond issued in the USD. And so far so good, because of when you look at the fiscal responsibility, we've kept up to our end in terms of interest rate payments. We've kept up in terms of our bond, local bond issuance. So when it comes to the ratings, and recent times our ratings have always been improving over time. So no matter how we look at it, we would still have some level of what's the word, subscription or over subscription when it comes to our instrument, and that is basically what's happening. So the word renewed looks like we were bad. No, we were not at any point in time. In fact, if not for the recent issues, political issues from the U.S. president, or what the tax issues. Yes. If not for those issues, we've always been having a subscription across board in terms of whether it is Eurobond or even it's our local bond. So it is not. It is basically a continued patronage in terms of our instrument, and it's a good one, because then it means that we have access to more cash. We can be able to then do whatever we want to do with our access to funds, because going into the end of the year, we are expecting a lot of foreign investments that would be taking out their profits, and you need access to dollars to be able to maintain the pressure they would put on the naira, because as soon as they are pulling out their funds, you should be expecting a lot of demand for dollars, which would increase the pressure we get on the naira. But now that we have euro bonds to back this up for the next couple of months, then we are good. So we should be expecting, no matter how bad, expecting the naira to still range within the current 1436, 1440 price range, even into the new year.
Okay, so especially with the festive, imports and speculative demand already heating up, how sustainable is the naira's current stability?
Yeah, so I think it is. I think it is sustainable because then instruments like the Eurobond that was issued will definitely play a major role. And whether we like it or not, Nigeria is becoming a hub for festive activities. In fact, we saw what the Minister of Tourism was talking about. There should be a task force for Dirty December, and also most of the time what happens is that we see a lot of influx of the foreign currency into Nigeria. So when you add that with whatever the CBN is doing in terms of being able to defend the naira on a monthly basis, we should be able to manage even in the medium term to be able to sustain whatever the price range is. So 1436. So even if it goes lower, we should still be around 1450, 1460, but we will not exceed that.
Okay, so and while the Nigeria's Eurobond success appears to have lifted, right, at the private market, however, the story was mixed. This is the naira gained 25 naira day on Friday, which traded, like I said, at 1,455 naira per dollar, but still posted, that there was a 15 naira loss for the week due to rising festive dollar demand and speculative pressures. Meanwhile, Nigeria's external reserve rose slightly to $43.32 billion. That is around a 0.2% uptick linked to Eurobond inflows and stronger oil receipts. Now, what is your general overview about this whole new development?
So I think that we should not get to a point of panic in terms of where the currency is, because then whatever the mixed reaction we got from last week was because at the beginning of the week, there's an announcement over the weekend that created investor panic, people trying to like pull out funds. So the pressure, whenever there is uncertainty in any economy, everybody moves towards safe haven. So everybody was trying to now move their naira denominated assets to $2. That was what pushed the pressure on the naira and the prices. But the Eurobond coming at the right time, right, basically balanced out the pressures, and now we are back to normal. So what we are hoping not to have is that kind of uncertainty that was created by that political issue 2 weekends ago, that the authorities in charge should be able to handle that so that we can have a very, very stable market going into the festive period where people can begin to make a lot of decisions based on whatever they are seeing, because you cannot plan into the new year. You can only plan based on what you're seeing, then forecast what should happen. So for investors here, there is still continued support or continued patronage for Nigerian related assets, because yes, our interest rate is still high, like globally it's one of the highest, right? And even though yes, we were saying going into the new year we might have reduced interest rate because inflation is basically decelerating at the point, but you still want to have, because when all these Euro bonds, Dangote Refinery, they all play in the demand for the naira or the supply of the naira. So if we're able to keep all those things at the way they are, then of course we should be able to say that no matter how we look at general outlook, it should still remain stable going into the festive period. Okay,
so let's go to the next story, because the whole Nigeria's Eurobond success appears to have lifted investor confidence and our external reserves at the same time. But the federal government is also not slowing down on borrowing, right? There is, in fact, there is a new facility that is on the table, which is this time, I think, is a $500 million loan that is requested from World Bank, and then which they say is, aimed to boost small business access to credit. Now, according to the World Bank document, the proposed facility, which is titled Fostering Inclusive Finance for MSMEs in Nigeria, that is, I think, FinClude, right? Yes. That is designed to channel a funding through the Development Bank of Nigeria and its subsidiary, that is the Impact of Credit Guarantee Limited, the project that is seeking to deepen credit access to small private capital mobilizations and introduce innovative lending tools that is tailored to the needs of micro, small and medium enterprises across the country. Now, this project is pegged at $2.39 billion with $500 million, which is the one that they're seeking to borrow, expected to come from the World Bank, then $400 million that is from the International Bank, and then another 100 from reconstruction, yes, that is from the International Development Association. Now, some analysts are saying that this is not a good move, while some are arguing, opposite. Now, this brings me to the question, right? With Nigeria's Eurobond in over subscription, because we have, finally agreed that there is success there. Now, do we still really need to do more borrowing? Do we really need this $500 million facility?
Okay, so well, because the problems are there, right? When we track back the issues, right, from the entire fiscal reform, really hurt the economy in terms of internally. Even though we now have access to a lot of, everybody wants to borrow us money, everybody wants to subscribe to our Eurobonds, but it created a vacuum locally where prices were basically too high, right, for businesses to thrive, for consumers to consume. So it is important that apart from, of course, we've seen different loans from the World Bank that had to do with social security, trying to reduce poverty. So if this is about SMEs, it is not a bad idea in itself, right? But the problem has always been implementation. So because then what we need at the moment is we need to kickstart our SMEs back, because now we're at an era of recovery, right? We've been hit by the tsunami of the reforms. Now we need to recover. Inflation is coming down, right? So businesses need to be able to now expand, and expansion would come from access to credit, right? I'm happy this is not done through the commercial bank, because the rates itself are very high. So it is done through Development Bank, which would definitely give the SMEs these loans are probably single digits, right? So at the moment, that is what we need, right? That is the kind of policies that is important that we use in driving the next phase of SMEs being able to produce at a large scale that will definitely expand the economy. So in itself, it is not a bad move, right? For those arguing against it, it basically stems out of the previous preceding loans that we do not really see how they've been quality implementation. Yeah. So if it's not that, if it's about the idea itself, it makes sense, because the total plan is about two billion, about 2-3 trillion naira to boost SME activity and improve the performance. Yeah, it is a good one, but let's just see how World Bank has the document, right, of the proposal from the Nigerian government. What we want to now see from the Nigerian government is how are we implementing this, that it is all inclusive. It is not that it comes out and we don't know who is qualified for it. Some people just tell you they've gotten it, and we don't know. It is not necessarily out for everybody to access, or it is given to people that don't necessarily need it. So those are the things that are very key to whatever the plan is. World Bank is willing to give us more loans to be able to help us rebuild. I think there's nothing bad in it. The issue is just the implementation.
So how do you think the government can really ensure that this particular fund that is meant for the MSMEs to really get to them, to truly reach the right people? Because because these people are the people that drive Nigeria's economy, and then we just need to find a way to get this money to them so that it doesn't get trapped in bureaucracy.
So I think the first thing has always been about identifying which industry needs this the most. Right? I think that if we're having maybe 2 trillion, 3 trillion dedicated for SME growth, I think it's important that we are able to basically divide. Okay, which 40% of this goes to these industries, or this goes to this sector, because then that is where it can be properly evenly distributed. Because if it's about who can apply, then a certain particular kind of cluster will simply apply for it. They do better, but the entire landscape of the GDP figures, GDP conversation is not, the economy is not expanded as it should. So I think it should be properly evenly distributed, and conversation should really happen. It shouldn't just be the usual way where a business just applies and they ask for documents, business plans and everything, and it now goes into a particular board meeting and everybody decides based on the figures person present. I think it should really be a conversation, a proper, like an interview kind of, right? You might be saying that this might be too much, but at the end of the day, this is why these organizations are set up, right? To be able to, because if it's a bank that's giving you such facility, they will have a conversation with you. So, right, so this same thing should apply here too, that businesses should be able to say, okay, if I'm applying for this, I should be scheduled for an interview, right, where this particular business or whatever I need this for my SME should be discussed, and you should pass through that panel. That panel should know what exactly are you trying to do. So you don't give blanket statements or blanket conversations, you just get it out. So if that real work is done, there's a likelihood, even though you can't get 100% right for implementation, but you are close. You are even about 60% close, 70% close to delivering the real essence of why those loans were collected in the first place. Oh,
okay. So now, beyond Nigeria's search for fresh financing, the federal government says investor confidence in its reforms is, already yielding tangible results, with billions of dollars in new investments flowing into key sectors of the economy. Let's go on this for a quick break. When we come back, we'll discuss about the fact that the federal government says that it has attracted $5 billion in fintech, from all the investment that was made. Stay with us.
This is Rapid Broadcasting Network, RBN. We connect people, power stories, and amplify voices. On Rapid TV, we're rooted in culture and your window to the stories that matter. From news to lifestyle, we inform, entertain, and uplift. Join Rapid TV on Star Times Channel 176, Nightcomsat. On Rapid FM, we speak your language, from the soulful airwaves of Umuahia to the vibrant culture of Port Harcourt and beyond. More than broadcasters, we're creators, amplifying that voice within with powerful content across TV, radio, and digital. Join us at rbnradiotv.com and all our social media handles. One network, one voice. Rapid Broadcasting Network, RBN. The sound of your city, rooted in truth, driven by impact.
Nigeria's economy, the global markets. What does it all mean for
You're welcome back to the Business Lens on Rapid TV. A quick dive, into the next story, where President Bola Tinubu says Nigeria has attracted over $5 billion in new investments across the manufacturing, the fintech, and energy sectors, which is a development he described as a proof that the administration's reforms are restoring investor confidence. Tinubu being represented by the Minister of State for Industry, Senator John Eno, the President, made the remarks at the 39th Lagos International Trade Fair that is organized by the Lagos Chamber of Commerce and Industry, LCCI for short. So Tinubu, credited the inflows to policy measures under the Renewed Hope agenda, including the removal of fuel subsidies, forest unification, and the ongoing business regulation reforms. He even added that the government's goal is to translate Nigeria's economic potential into real productivity, strengthening local industries, leading the implementation of the African Continental Free Trade Area. The LCCI President Gabriel Idahosa also revealed that the fair has already generated over 250 million naira in local value through both construction and artisans engagement. And I think I saw that the artisans, we have 280 artisans which were engaged, which reinforces its role as a catalyst for trade and job creation. Now, with over $5 billion, dollars reportedly attracted to the federal government, what do you make of this story generally?
Okay, so I think that even though we don't have official figures of that yet in terms of whether we've had over 5 billion FDIs, what I think that the government is still mixing up. Yeah, I think what we've done successes when it comes to the energy sector, because that is where the subsidy removal had a bad perception, or sentiment in terms of transparency, right? But every other aspect of maybe the forex unification, which also played a role in what we now have, which is an effect, which is an aftermath of the CBN's increased interest rates, and also being able to structure that particular sector, activities from all the players. I think when you take out those reforms, I think the reforms in itself the value of those reforms is not necessarily an economic growth or economic wonder, right? We don't measure economic performance, economic growth on those kind of reforms. It is usually the effect it has on the economy. Right? So when we say we've attracted over 5 billion, I think we shouldn't be, like I said, the data will still come and we'll see FDIs. Okay, so
do you think that this is sustainable, and how?
So for me, right, I think that at the end of the day, the real work has not started, right? Because when you say you've done these reforms, which are just pricing reforms particularly, yes, you can now attract a lot of people for your Euro bonds, for your bonds and all, which is still borrowing that you are getting, doesn't necessarily translate into building infrastructure, building anything. So when you've not done all those things, you cannot completely say you've done. Yeah. So of course, for all what he said, I'm happy. He also mentioned the fact that Nigeria is leading the AFCFTA conversations, because that is where I feel that if you're going to be expanding in the next decade, that is where the opportunities lie, right? And if you're going to lead that conversation, we also must be a big producer, because if you are leading free trade conversation, free trade means I can walk into your country and sell. You can also walk into mine and sell. But so if we are the ones buying, it is a problem, right? Because then there is no possible expansion for for your own producers. So what we are happy about, yes, is that from the oil sector, we've seen Dangote Refinery really help in terms of the exports, right? In fact, our major export bills, right, no matter now it's very high, we are more like an net exporter right now, is almost Dangote Refinery alone, because then when you look at the dollar value or naira value, it's almost, so what we need to do is to make this an holistic conversation, and for FDIs to actually come right into the real sector, we still need to do the real work, which is infrastructure development.
So do you think that this is really translating into real jobs?
Not yet. It is not translating, and that is why I don't know why, but yes, politicians would like to take wins even before it matures. But I think that it will be more interesting if these are translated into jobs, and people can now say, yes, we are actually making more money, our lives are better, we can consume more, we have more disposable income, then that is when the real win has happened, right? So I think we shouldn't be celebrating the wins yet. Yes, we've done a reform that was usually hard to do by previous governments, but it has not translated into real results yet.
Okay, so how do you think that Nigeria can move from investor confidence to actual industrial competitiveness?
So what we have as investor confidence is not in the real sector, it's in the market, it's in the financial market. More investors are coming into the stock market, but for us to really grow, we need real investors in the real sector, and they would not come without having to sort your bottlenecks when it comes to registration, sort of bottleneck when it comes to your customs, the sort of bottleneck when it comes to infrastructure, because those are the things that will make a company come into Nigeria and say, I want to set up shop here because I see that you guys are consuming a whole lot of products. So when we talk about, when we take the infrastructure away from the conversation, we also not talk about the consumption level of even your people, right? So can having Nigerian consume a product of 1,000 naira, 2,000 naira? Those are the things that would matter, and that has to do with your wage bill. That has to do with, so we've had a fixed wage bill for the longest, and while prices are rising. So if prices are coming down, the wage bill should be rising to meet it, so that an average Nigerian can consume more. So that is where you really start to pick your wins and say, yes, we are doing this the right way.
Okay. So while Nigeria continues to attract billions in new investments, trade data shows that the country's relationship with key partners, like the United Kingdom, is also strengthening, particularly in energy, where refined oil dominates UK exports to Nigeria. This is as refined oil accounted for 1.5 billion pounds, or you could say 68.8% of the United Kingdom's total goods exports to Nigeria in the 4 quarters ending June 2025, rising 62.8% compared, with the previous year. Total UK exports to Nigeria grew to 12.3% to 5.6 billion pounds, while imports that came from Nigeria increased to 8.2% to 2.3 billion pounds, bringing total bilateral trade to 8 billion pounds in total. That is around 11.1% up, or you could even say 793 billion pounds in total when all of them is combined. Now, that is, I think the UK exports included toilets and cleansing products, industry, machineries, textile, fabrics, and mechanical generators, which all posting significant year-on-year increase on the Nigerian side. Crude oil remained the top export to the UK at 1.3 billion pounds, which is 73.1% of the goods, followed by the refined oil that is around 223.8 million pounds, and gas also went up to 167.8 million pounds. The gas exports also surged 75%. Refined oil went up to 62.6%, and crude oil at 7.9% year on year. Now, there's a whole lot of analysts coming to say a lot of things about this, which there was also a remark about Dangote Petroleum Refinery that is said to have is capable of producing 650,000 barrels daily, and planning to double production, which is helping Nigeria shift from crude oil only exports to more refined products, which has likely assisted in strengthening the UK-Nigeria trade relationship. So now this takes me to the next questions. What factors do you think are driving this increase?
Of course, I think the report is clear enough in terms of the fact that it is oil. The UK has not really been a major trading partner, right? I think when you look at both sides, maybe top 20, top 25, even though there is an opportunity to actually do that, I'm not even seeing the opportunities from crude or refined products. I'm seeing it more from gas, right? Because we are getting to the period, a seasonal period in the UK, even in Europe and even the global north, where winter comes, weather is extremely cold, they need more gas supplies. So these are the kind of bilateral conversations we should be going for. I think what we've done since the new government came in is to go for bilateral conversations where we can get FDIs. But I think you also need to go now that we have a lot to sell, particularly when it comes to oil products and allied products. I think it's important to also start initiating conversations where you can also sell, right? Because if you don't get investment, at least you sell products, right? So because then the more you sell of more products you sell, you make more money. So so UK, for example, would be a perfect partner, because now that gas supplies has increased, you can leverage on it going into the new year. Now, can we have a 5-10 years gas agreement that, okay, with so number of supply comes in, and we can guarantee the supply, right, to you, and you get whatever arrangement that would be, whatever goods you want to also send back to us, so that everybody is on a balanced level, because whether I like it or not, the UK is no longer part of the EU. So the kind of trade agreements that you would have with the EU against other regional bodies is no longer there. So it is the UK alone now, and they're also struggling when it comes to economic expansion. So when prices are down, particularly when it comes to gas supply, which is usually a major cost center for both government and even private individuals, it is a good deal. So I think this data is a very good one, and calls opportunities for Minister of Trade and Investment to say, okay, I think it's time to initiate a conversation with the Secretary of Trade in the UK and say how we can actually work on an arrangement.
So what do you think this
more.
mean for the country's trade and balance and domestic energy sector? Yeah,
so for trade balance, yes, we're getting to a point whereby we're getting a lot of positive improvement, right? For the oil sector, that means what it means right now is that what it looks like is that us getting our oil sector back, right, to where it should be, would really give us a lot of leeway in terms of increased revenue, being able to actually balance our exchange rates, being able to have enough funds in our reserves. So for the outlook, it makes sense that we've gotten the oil sector back, even though it's a bit late because we had opportunities 2, 3, 4 years ago. But it means that for the next couple of years, right, oil would be back to the capacity we really need it to be, and gas also, and can help us now say, okay, we want to expand other aspects of our economy to be able to compete globally and also do same based on what we're doing with
okay,
oil.
so and finally, let's take a quick look at the markets, which is turning our focus to Nigeria's stock market, where sentiment, remains under pressure despite an otherwise resilient economy. The benchmark Nigeria Exchange Limited all-share index fell around 1.10%, dragging the market's capitalization down by approximately 1.05 trillion naira to about 94.6 trillion naira. The trading volumes also improved slightly, with around 530 million shares that traded in nearly 25,000 deals. But the total value declined, underscoring the cautious mood among investors. Notably, we have major losers, which included mid-cap and large-cap names such as CI Leasing PLC, Transcorp PLC, each shielding close to 10%, while a handful of smaller stocks managed modest gains. And analysts attributed the weak performance to heightened risk aversion abroad and renewed concerns over Nigeria's external debt and inflation risks. However, as the year winds down, the key question for the markets remains: will confidence return, or will investors continue to sit on the sidelines? What do you think of this update on the stock market?
So I think it's just it's two things. I think it's the fact that the year is coming to an end. People take profit. I think people should understand that we had a very, 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 very bullish run in 2025. Extremely bullish. That might even look like got to a point that it looked overpriced, it looked overvalued, and in the market, anything that goes up will surely come down, right? So, but general outlook, it is still a bullish run in terms of the market. Right. What people are basically doing is just taking profits, and they'll keep doing that till the end of the year. However, it would not have been this sharp in terms of decline if there was no heightened political issue that came in between, and everybody just wanted to just take it out, because naturally, even globally, whenever the issues like this happen, everybody will run to gold. We've seen what gold has done this year. Yeah, so that's because everybody wants to push their funds into safe haven assets, and that is why we saw that consistent sharp decline. But the sharp decline will also normalize after a while, and people will begin to take positions going into the new year. It will still remain bullish. If you're an investor in the market, just come back. There's still a lot of money to be made, and I still feel generally the market cap is still is still undervalued, which I think that whether we will see it in 2 or 3 years to come back to the actual value, because if you look at the exchange rate devaluation took it down from I think about maybe 70 billion to about maybe 49. So we still have that gap to still fill up at the end of it, and everything is looking good. It's just a normal blip that will definitely recover after a while.
Okay, thank you so much, Daniel. And you heard him, he said there's still a lot of money to be made, and you investors, you could come back and still continue trading with us. And that's the Business Lens for today. Many thanks for being here. I am Divine Alex, and thank you so much, Daniel, for being part of the show.
Thank you for having me.
All right, bye.